we are, sticking with our advice for clients to not get too aggressive with markets that have obviously rallied a lot in the short term, but to continue to focus any dry powder on secular growth themes. Those are the ones that we've talked about a lot on this program. I know you talk about a lot. Things like healthcare innovation, things like the transformation we're seeing across the digital landscape. You mentioned the strength you've seen some of the places there as well. And I think for clients focused on yield, increasingly we're going to be aware that even if we see a reopening being successful, even if the economic damage is not as great as we think it's going to be, we're in a very low yield universe for a long time, and increasingly we're finding clients yield in other places, infrastructure, real estate, and a whole host of hybrid securities as well. So reasonably positive on the outlook, but I think we have to be aware that there's clearly problems in some reopenings, and we need policy to remain absolutely on the front foot. Hopefully we're going to see some of that out of the UK today.
People want to try and find some value in value. They like your secular growth themes, but they're terrified about the prices they have to pay for it as well. Is there any value in value, sir?
Well, of course there is, absolutely. We want to, as a baseline exposure, to have a very well diversified portfolio across the world. And we have some select cyclical names that would come under the value heading that I think that we're pretty excited about. And when you talk about long run strategic asset allocation, when we look at what's going on in Europe, when we look at the change in the policy mindset and activity rate from the European Central Bank, when we look at the positive news around the European Recovery Fund, when we look at potentially a more constructive tone even under the Brexit negotiations, then we consider the huge underweight that a lot of institutional investors are running on their European assets. There is a case there to potentially close some of that underweight very gradually, and focus on areas in Europe which either have a high exposure to some of our favored sectors, say healthcare with in Switzerland, or potentially are linked to a strong rebound out of China and some of their secular themes in Germany, and potentially some other select exposures around Europe, which would qualify as value.
Very interesting you mentioned Germany there as well, because I was kind of going to go there, because I don't want you necessarily to speak about Wirecard in particular, but I think one of the reasons why so many people kept with Wirecard despite the doubts is because they were desperate for a European tech success, something to kind of hang your hat on in Europe as well, and we haven't got those big names as well. Is there a good tech story to be had, or a secular theme story to be had in European equities? We seem such a laggard.
They are laggard in terms of they lack some of the mega cap tech names that dominate our conversations around the world. But I do think that you can absolutely tap those kind of secular growth themes in Europe. You just have to be a little bit more nuanced about it. There are some significant tech names in Germany, as you mentioned. But a couple of ways we do it is you firstly look at the mid and small cap space. That's actually where a lot of Europe's finest firms with the most solid moat around their businesses reside. That's where the companies that invented terminology that we now use all the time, such as Industry 4.0, the linkage between technology and the manufacturing base, the automation of that manufacturing base. A lot of leaders globally are registered and listed in Europe, even though their businesses have a very high exposure to the rest of the world in these sectors. Furthermore, in the private credit space and even in the European high yield space, you can find exposure to companies, often companies that are not listed in terms of the equity market, and therefore is the only way you can gain access to them. And many of those are in those same sectors as well. So it certainly takes a little bit more thought and positioning than just buying a large cap tracker in the US and all the exposure you get there, or a Nasdaq tracker. But we can absolutely find some of those exposures in Europe as well. And that is a theme that we talk about with clients, because you can like all those big cap tech names in the US, but we want to watch concentration in a portfolio as well. And so trying to tap some of those same themes with international names is something we talk to our US client base a lot.